Having the right credit score is going to play a big impact in your finances and how much money you end up spending or saving. Let me give you an example. If you were to go buy a car right now and you are going to finance it or even lease it, odds are that they are going to pull your credit. And in most cases, even if you're buying a car cash, for whatever reason, they're still going to pull your credit. If you are going to get a mortgage, whether it's a 15-year or 30-year mortgage on a home, odds are your credit is going to get pulled. If you are not going to be paying cash at a furniture store, whatever it is, Ashley's, Rooms to Go, Cane's, odds are they're going to be pulling your credit. You see, that 3-digit code or that 3-digit number, which is really a code because it either gives you access to a better interest rate or it keeps you from obtaining the right financing with the right proper monthly payment that fits your budget, is what really determines whether you're going to be in or you are going to be out of that brand new car or that brand new house. And while there's different credit monitors, the main one that is looked at is known as FICO. Here's a simple breakdown so you can see exactly what I mean. Your payment history, that's your account information, including delinquencies, public records, amounts owed, how much you owe in your accounts, the amount available in credit that you're using, revolving credit lines, length of credit history, that's how long you've had the accounts open for, your credit mix, that's the mix of accounts that you have, let's say like a car payment or maybe a couple credit cards, or maybe if you have some type of financing with your school, maybe some loans, and also new credit. This is when you pursue additional credit cards, including credit inquiries and a number of recently opened accounts. And if you've ever wondered if it's possible to raise a credit score by at least 100 points, the answer to that is yes, but obviously that's going to heavily depend on how low your credit score is because it's a lower risk to reward, meaning the higher your credit score is, the lower you'll see any significant jumps. While let's say if you're in the 400s, you can see from 400 to 550 within anywhere between 30 to 60 days. Now, that's no guarantee because everyone's situation is different, but I at least wanted to point you in the right direction if you are in your pursuit for a better credit score. If you're in the low 5s, hopefully this will get you into the higher 6s or 7s. And if you're in the 7s, hopefully this bumps you into the 800s. So let's go ahead and jump right into the first way that you can build your credit score fast. And this should be a no-brainer, but unfortunately, a lot of us tend to either forget it or maybe put it on the back burners because it doesn't seem like it's important. But again, it should be at the top of the list, and that's pay your bills on time. Again, I know that sounds easier said than done, but for whatever reason, we tend to forget that even though we put it on a credit card, that doesn't mean that it just magically goes away. You see, the fastest way for you to build your credit is for you to continually pay your bills on time. My recommendation is to get maybe an app that's going to set you a reminder, or maybe have it in front of you on maybe a notepad, or maybe on your desktop, or even on a calendar that you look at every single day. That way you know exactly when each payment is due. Now, word of advice here, if you, let's say, miss a payment, again, when it goes to report in the credit bureaus, it reports every 30 days, 30 to about 35 days. When it reports to the credit bureaus, you want to make sure that if you do miss a payment, call that credit card company immediately and set up some type of payment arrangement. That way you are still within good standing with them rather than just having these late payments costing you strikes on your credit, which is ultimately going to drag you down. You don't want to have too many of those accumulated on your credit score because that's going to drastically drop your credit altogether. The next thing that you want to do is you want to make those payments frequently. Here's what I mean. Let's say you have a $100 payment. The minimum payment is right around 40 bucks. Let's say if the minimum payment is 40 bucks, most people would just send the minimum. But unfortunately, what ends up happening is that you end up paying more for a product or for a service because of interest rates, no matter how good the interest rate is on the back end. So what you want to do is you want to set up some type of micro payments. So what I would do, let's say that your statement opens on, or let's say that your statement closes on the 21st of every month. And then your statement, let's say you get the statement so that you can pay for your credit card on the 1st. What I would suggest doing, and this is what's worked for me, is I would go ahead and send 2 different payments and ensure that when you do this, you send more than what is actually on the minimum. Here's why. Let's say you send $25 on the 10th, and then again, that statement is due on the 21st. You want to send another additional, I'd say, 45, maybe 50 bucks. That's going to put you over that threshold that we just talked about. Once you start paying more than the minimum, 2 things happen. One, it's going to drop your credit utilization rate, which is going to skyrocket your credit score. And at the same time, you're paying that debt off faster, so you're also picking up less interest on the payment altogether, which is going to free up your account and help you get out of debt a lot faster. In addition to doing that, you want to find out what your credit limit is with your credit card company. Here's what I mean. If your credit card limit is $1,000, you want to find out, okay, how long have I been with this credit card company? Can I call them right now and let them know, hey, look, I've been with the credit card company XYZ for 3 years. I've only been late once, or I've never been late in the entire existence. Make sure that you have this stuff in front of you. Let's say how long you've been with the company, if you've been on time with them. I don't recommend using this approach if, let's say, for whatever reason, you've been falling behind lately, because they're just, quite frankly, they're just not going to raise your credit limit. In fact, they're going to possibly reduce your credit limit. So I would have at least 6 months of a good credit standing with them, meaning you've been paying on time. Give them a call. Obviously, have that information in front of you, how long you've been a customer with them, why you would like to increase your credit limit. And again, provide them that information of how successful you've been in making those payments and not falling behind, whether it's the last 6 months or the entire time that you have the credit card. The reason you want to do this is because it's going to increase your credit utilization rate. So let's say that you have $1,000 as a credit limit and you're always spending $300 a month. That's a 30% credit utilization. Remember what we mentioned earlier, one of the biggest factors for your credit score is going to come down to your credit utilization. That's one of the 5 factors when they're looking at the FICO, or what determines the FICO score rather. So what you're going to do is you raise that credit limit to, let's say, $1,500, $2,000. Let's say $2,000 just to play with round numbers. That $300 now becomes, what I would say at the top of my head, right around just under maybe 15% credit utilization, 15-20% give or take, down from the 30%, because you want to stay under that 20% threshold anyways. Now you're probably thinking, okay, Irv, I tend to follow Dave Ramsey a little more, so I'm not really, a big fan of using credit cards. What can you recommend for me? If you maybe follow a more strict Dave Ramsey approach where you just don't believe in credit cards, try to find someone that you know and trust that does have a good credit history. Maybe it's a parent, maybe it's a sibling, maybe it's a cousin. Try to find someone that you actually know though, because this is going to be important. When you pair up with someone, they are going to put you on their credit history or credit line. This is known as an authorized user. When you're an authorized user, you pretty much have all the benefits that they have with their credit for that specific line of credit, that credit card. So what that does for you is it pretty much tallies up whenever they make a payment on time, or whenever they have maybe a credit card that now gets reported that's in good standing. Well, that same report gets reflected onto your account with the 3 bureaus. And this is going to be important because if you find someone that has been making late payments, then it works the same way. That's going to drag down your credit score. So try to find someone that is financially responsible, find someone that knows what they're doing with their credit cards, doesn't go overboard, and doesn't use them in a way of what I would call survival mode, that's just living off of their credit cards. They're using their credit cards, they're not letting credit cards use them. So choose wisely with that, because that does work like a double-edged sword, but it is what I would call the most effective way to build your credit score without actually having a credit card. In addition to that, I want to add 2 more things. Don't close any accounts that you have open, regardless if you are not using the credit card or not. One thing that I would say about that though is if you're not using a credit card for an extended period of time, the bank or the credit card company may close that out for you. Now, again, I don't recommend that. It doesn't work against you if they do close it, however, but you do want to keep that open because, again, this helps with overall credit mix. So you want to have a nice credit mix, whether it's a car loan, maybe a home a mortgage, if you have some type of student loans that you're paying off, or if you have maybe some type of credit card for maybe just kind of going out, using it for groceries, maybe travel. One thing that I will say about credit cards is that, and that's this. I know that credit cards get a bad rep when people are using them. And the reason for that is because we tend to use it more, and when I say we, I'm going to include myself in this, we tend to use it more from the side of just instant gratification, right? We use that piece of plastic, we pay something off, and then we feel like we've paid it off, but we really haven't. We've just maybe created like this backlog, if you must, of debt that we've now added on to ourselves. And what ends up happening is, let's say instead of setting aside, you went out and you bought a toaster for 40 bucks. Instead of setting aside 40 bucks like you would with a debit card where it's long gone, well, what ends up happening is now the $40, you still see it in your regular checking account, and now you go out and you use that somewhere else. rather than just paying that toaster off entirely at the end of the month, whenever that cycle closes or whenever you get that statement. I say that because there's a big myth that you have to only keep 20% down or 20% utilization, or keep it below 30% credit utilization. You can absolutely max out your credit cards. And I'm gonna say this with a word of caution. You can max out your credit cards, let's say $1,000. You can use all $1,000, especially let's say you're in business and you're always buying supplies, things like that, as long as by the end of the month, you are paying that off in full. I don't recommend this option if you are just living off of credit cards and you're using it to survive, or you're using it to pay a light bill because you maybe couldn't get a cash advance, or maybe you just barely made enough at your job, or your business was just breaking even this month. I wouldn't recommend it for that, because at that point, that's when you really start picking up some debt. But if you are in a financial situation where you want to accumulate points, you want the cash rewards, you want the flights to pay for themselves, at that point, I would go ahead and pretty much, if you have the money in your account sitting there, rather than just swiping your debit card and not getting any rewards for it, I would go ahead and use my credit cards to my advantage so that it can pay for my luxuries on the back end. Now, again, this method may not be for everyone, but it has been working for me. Again, it does require a little bit of discipline, but you can do it if you have your budget in place, if you have your calendar, you know exactly when all of those payments are due, and you know how much money is coming in and how much money is going out. And again, you're not using your credit cards, or your credit cards aren't using you. You're using your credit cards. So don't get that money psychology confused, all right? So there you have it. I hope that you enjoyed these super practical yet effective tips on how to build and raise your credit score quickly. Don't forget that anytime we're not posting on here, we are posting on the Insight with Irv show, which is our podcast style channel. So make sure to subscribe to this channel, as well as subscribe to the other channel as well, so you can enjoy various styles of content. And I also want to thank our sponsors over at Amazon's Audible, where they've made it easy and convenient to enjoy not only a free month, but a free book by hitting the link down in the description, as well as enjoy some free Amazon originals, podcasts, guided meditations, you name it, they have it on there. Once again, my name is Irvin Pena, also known as Irv Official. Until next time, everyone, we'll see ya.